a daily strategy session for Forex traders, tradersway.com. Got a lot of requests here. Oil just broke through 50, so we want to look at oil. A lot of interest in British pound, US dollar, Japanese yen. Yeah, sounds good to me too. Let's get her done. Okay, my name is Wayne McDonald. I'll be the leader of this strategy session. I've been trading currency for over 10 years publicly and even longer on my own. Just want to remind you that I use generally accepted techniques, just technical and fundamental analysis. It's worked for me in the past, but past performance does not predict future results. Trading with leverage is risky, not appropriate for everyone, so never risk money you cannot afford to lose. Let's do a quick review of what's going on in the world. Right now it's London lunch, 7:30 in the morning, New York time. S&P 500 futures up 0.25%. NASDAQ down 1.5%. 10-year T-note flat, but at 2.04. Woohoo! Not good. Oil, yup, we broke through 50. Yes, WTI right now at 49.25, down almost 2%. Wow. USD yen down 1/3%. Euro USD down 1/3%. French stock market flat. German stock market up about 0.5%. And the UK stock market down about 0.5%. As far as currencies are concerned, British pound is moderately strong. Euro is quite weak. Swiss franc very weak. Japanese yen quite strong. US dollar very strong. Aussie dollar very strong. CAD dollar very strong. Kiwi dollar very strong. So we got lots of strength in the commodity currencies, right? The prime bond markets in the world, in the US and Japan, they're quite strong. And it just looks like Europe is sucking wind again. British pound was very, very weak. It's gained some of it back over the last hour or so, but it might just be lunchtime, right? Couple more martinis and we get back to work and maybe that British pound weakens again. Could be an opportunity for us. Okay? Very interesting, right? All right, so let's, you know what? I don't have a drawing tool. Man, let me get my drawing tool. This is where we left off. I haven't even touched the chart since yesterday. Remember, it made a low and we identified two zones to short. Right? We identified, here, look, my drawing tool's ready now. Okay. We were down here, if you recall. Right? Nowhere to, you know, this was the midpoint cycle level here, if you remember. So there was nowhere for this to fall. You had a couple of chances, right? If you wanted to buy, we talked about, you know, 119 and big cycle levels being opportunities. If you want, you could take a higher risk trade, right? A higher risk meaning, you know, like it's not a higher risk fundamentally, but the fear is that the yen strength is repatriation, and that's a big flow of money you don't want to stand in front of, right? That's like a freight train of money. So how would you possibly trade that if you wanted to get in fundamental, but technically it was still bearish? How do you get into that, guys? How do you do that? Anybody? 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 One way to reduce your risk is do it this way. Right? So since you have a Trader's Way account, your MT4 is, you can also manage your binaries. So what you do here is you long the cash because you want to get into the fundamental trend. which on the long term, by long term I mean over the next year, this should be going up. You don't know if this spike level is the reversal point, where you're heading back up. I like big key psych levels for doing that, right? So in that case, maybe you take the shot. In the cash market, you long in there. Imagine once you get onto that psych level, which we were at yesterday, when you're at the psych level at 119, you go off of let's say you're watching it on an hour chart or a 15-minute chart. That's where you drop into a 1-minute chart or a 5-minute chart. You look for little tiny reversal patterns, but it's reversal patterns at key support levels. You take a shot, drop a stop, right? So you go long off with a reversal pattern off of support in the direction of your prevailing fundamental bias, but then you hedge your downside risk with a binary option, so that if you're wrong, the binary option pays you a profit. And it doesn't cover all your losses, but it cuts some of your losses. And that's the name of the game if you're a professional trader, is give yourself opportunities to win, at the same time reduce the downside risk. And on the long run, right, you'll be better off, right? But our trade plan yesterday was not that. You could do that. I think we suggested it here. But anyways, what we did do is we identify 2 levels of resistance. Why would we do that if we were at support? Why would we do that? We're at support. The oscillator is way oversold, trying to come back. Why would we identify levels of resistance if price was already way down here? Oh, good morning, Daniel. Yeah, Jim, DeBeasta, Ernest, Dan, Jimmy. Hang on, I lost screen here. Hang on. Reload. Reloading. But why would we identify resistance? What does that tell you? Place to sell. Resistance is for sellers. Correcto mundo. Let me get the screen going back. There we go. Right? So what was the trade plan yesterday? First opportunity to sell is the first gray zone. Second opportunity to sell is the second one, right? So there was 2 setups that we left with yesterday. Right? Based on a couple of things, pivot point clusters, and so on and so forth. But that was yesterday. Look at the pre-London setup. Now let me change my drawing tool here. And let me zoom in a little bit. And then we'll move on to another one. Because this goes into a strategy that I use a lot. All right, so let's do it this way. All right. This I have marked as yesterday's low. This I have marked as yesterday's high. Isn't that nice? I hope you guys do stuff like this. And then what? How do you do a swing trade? An overnight, I call it the Asia fade. All right. The London market takes us in the direction of the prevailing trend, right? New York wraps it up. Asia fades back on profit taking, right? And then what? The next day, the prevailing trend should go again. Now, this case, the prevailing trend is down, so we're looking to sell. You see this little gray line right next to the daily central pivot point? I'm actually looking at the little gray line. It's the lowest low plus 382. That means that's the 382 Fibonacci retracement in a bearish trend. The next one is a 50%. That just happens to be the weekly central pivot point. And then this other one is the 618 Fibonacci retracement. Wow, right? So you know if you're Fibonacci, if you're using Fibonacci to trade, this is the strategy, isn't it? Okay, now this, like, let's review this. That's a daily central pivot, and just above that is the weekly central pivot. So using pivot point theory, that's a lot of resistance as well, right? And then what's the last really big piece of this equation? 120, huge psych level in there too, right? That's why we set it up yesterday this time, 24 hours ago. And now here we are here. Lufle tellumum. Cool, huh? But do you see all the components to the trade plan? So what do you want to do now, my friend? Question is this going to be resistance, right? On a 15-minute chart, okay, are we at resistance? Well, based on price action, what used to be support is now resistance. I'm okay. It is a pivot point, and there's an oscillator with like a kicker, the Stokes kicker. Not only are we hitting roll reversal resistance and pivot point resistance, but the oscillator is telling us price is having trouble making higher high relative to the previous 5 candles. So it's overbought and dropping. Okay. So what do you think of that? Yen strength, but I'll tell you what. I don't think I mean, that's a nice trade. It's trading like it's range bound though. Okay, double bottom. Okay, let's do this for the bulls now. Double bottom, this weekly support pivot. Just below it, it's daily support pivot. Okay, then, right, we also have this high here, which we've broken above. So if you're a bull now and you're heading back up, this is what you're to get the green marker here. This is what you're doing. Okay, you're going to look for something like this. Okay, that's a 1, 2, 3. Okay, first of all, you have obvious support, weekly and daily support cluster. It's key to have that. Without the support or resistance, your patterns are worthless. You have to have some resistance first. Okay, so it begs the question: are we at support if you're a bull? Yes. Okay. Does a bull buy it resistance or buy support? Support. Good. So now we need a reversal pattern at support if you're a bull. Okay. Top. Higher high relative to the previous high. So now what you'd be looking for is a Fibonacci retracement. So somewhere in here, you'll probably look to long if you're a bull. Okay. So this is where now you really zoom in. If you're a bull, you could do this a couple of ways. It might help. It might help to draw it out. Oops. Well, you know what? We need that. So might as well just leave it. Okay. You might want to set this up. Look for your sweet spot. What I meant to do was this one. It just might help to make a mental note drawing it out like this. If you're a bull. Let me adjust here. Okay. So a bull would be setting it up like this. Yeah, well, okay, 382, 50 cent, 618. I don't really want to make a 786 on this. So, but, you know, that would be the general idea. Okay. Now let's review what? Let's do some fundamentals here because we got to do some of these European currencies and they're weak, right? Why are they weak? Well, a lot of inflation data, right? This is inflation week. Not just inflation, but industrial production, and we're building up to NFP, right? But today was PMI day, so let's go through the PMI. You got a pen and paper? It's good for your fundies. India PMI 51.1. Hong Kong PMI 50.3. Japan PMI 51.7. China PMI, the HSBC one, 53.4. Services PMI 54.1 out of China. Italian services 49.4. See, if it's less than 50, it means contraction. The economy is getting smaller. Now that's the first contraction in 3 months. Not good, right? So again, Italian 59.4. Spain 54.3. Ireland 62.6. 29th month of expansion and highest since June. Good job, Ireland. Right? Hey, man, it was a pig. Remember? Not no more. South Africa PMI 50.2. It's 5 months in a row of expansion, but just barely. UK PMI 55.8. Good job. 24th month of expansion. All right. But it's the lowest since May of last year. Whoa. So we're back to last year's numbers. All right, so that's why the British pound's coming down, right? It's good. It's not the end of the British pound as we know it, but we're at last year's numbers. But at 55 versus most of Asia and the rest of Europe, 55 is awesome, right? Eurozone for to contrast, Eurozone PMI 51.6. 51.6. UK is 55.8, way more. All right. Now for Europe, for the Eurozone, that's 17 months in a row of growth. All right. Fine. I mean, the factory's moving, I guess, right? German PMI 52.1, better than the Eurozone. Right? French PMI 50.6. First expansion in 4 months. Good job, France. Oui, oui. Just barely treading water here. All right. So, but the big one here is the services PMI out of China is at a 4-month high, which is some good news. 54. And yeah, so that's good. That's good. I'll consider that good news. So that good news is coming from somewhere, right? And it looks like he's still floating the boat for all of Europe. The UK is doing okay, but it should be doing better, and that's why the British pound's coming up back. Now, to look at it differently, I spent most of 2013 buying the British pound. And a lot of that strength has come back. So for the economy to be chugging along, but at last year's numbers, shows you how good the year before was, and that last year was coming down. So, anyways, it's nice to put it all in perspective. So Europe is lagging, right? Guess as we speak right this second, British pound's falling, euro's falling, Swissie's falling. Well, that pretty much covers everything. I guess we could look at the Polish zloty or something, but yeah, coming down like a ton of bricks, right? So let's take a look at the pig. By the way, if I talk about a pig or pig dog, the pig is the British pound, the dog is the dollar. Sorry if I do stuff like that. Hey man, I've been doing this a long time. Got to keep it interesting, right? Let me change the value of some of this stuff. Boop. Boop. Okay. Drawing tool. This is the British pound. Let me zoom in a little bit, right? Boop, boop, boop. Just looking at my notes here. Back out just one more click. Boop. All right. This looks good. Yesterday's low, that's the spike on the gap, right? Yesterday's high. You know what? I'm not going to count the gap. Let's redo it. I have that down there, but let's do it this way. Because, spike open, that doesn't count, right? So this is what you would look at doing your analysis for swing trading, right? Is the trend up or down in your humble opinion for the British pound versus the US dollar? Dennis is down, Ron says down, Jimbo says down. All right. So this is how you do it. Ernest says down. All right, so this is how you do it. One of the things you do is you fib it if you're going to swing it. Okay. The second thing that you want to do in your analysis is mark resistance. So you know you're a bear. You know you're going to sell. That's a done deal. But when and why is a bigger one, right? You take a look. I would take these wicks and this candle here, right? And I would drag that across. And then I like to have two zones, plan A and plan B. Hey, if plan B don't work, run. Okay. Take the next support, should be resistance in the future. Bring it across. Oh, it's also a fib. And you got your two zones. I see two based on oscillators now. I see two scenarios. Right? One opportunity here and one opportunity here. Based on oscillators. And then notice time of day. The first one, the one on the left, right, is Asia. The one on the right is the European session open, right? So I'll take the one on the right. It would be better. It's bigger, more money flow, right? And the rest is just entering the direction in what you think the trend is. So you tell me it's down. So this is how you start your day, guys. You say to yourself, oh, the British pound is falling. It's been falling for a while. My job is to sell it because I think it's going to continue, so I'm a bear. So now I need to identify levels that I should sell at. One level would be Fibonacci retracement between yesterday's low and yesterday's high. The other one would be price action and resistance. What used to be support should now be resistance. The rest is just dropping a lot and popping a stop, right? So let's say you took the Asia open. Let's draw this in a different way. How should I do this? Let's do it. I don't know. Let's say you took the first one, because that's how life is, right? It's never perfect. Okay. Let's say a typical stop is what, 50 pips for a swing? It's reasonable, right? So that's 5270. So that'd be about 5320. So your stop's about here. Okay? Is that all right with you? That's called a trade plan. So you're like, but Wayne, that happened yesterday. Yeah, well, I mean, this is, I'm covering it so you understand the strategy, but now you should be able to do it for yourself. You should be doing this now. Excuse me. Are you a bull or a bear? Right? So where's the new resistance? Let's do it this way. Now, those are two levels of resistance. One of my concerns on this pair right now is it's Tuesday, and we're hitting the reversal pivots on a Tuesday. And I think I mentioned this yesterday as well. If you do that early in the week, very often, not always, obviously, time throughout the week, you'll come back to the weekly central pivot point. Have we done that yet? No. But there's always ADP tomorrow, right? We got Bank of England stuff. So if you remember, I believe yesterday when we went through the calendar, we talked about trading British pound early in the week and ending the week with a lot of CAD and US dollar, right? So, British pounds paid. Maybe we move on now. So the one thing you should know as a as a technical trader, where we are now is simply a higher level of risk if you're a bear. If you're a bull, it might be an opportunity. Doesn't really matter to me which is which. It's just you have to recognize what's going on. A bull would be looking for an opportunity. Key levels of support. Look at the pivot cluster down here at 5150. See, if I wanted to take a shot, this cluster of stuff here, yesterday's the big spike low, 5150, daily support, weekly support. So like I might want to go long here. If we get down to that, let's say today, around 10:34 this morning, New York time, if we're down there and get a little reversal pattern, what I might want to do is, because I still think there's room to the downside, but I might want to take the shot because that's a logical place. That might be a binary option call, right? That's why you're with Trader's Way, right? So you can do that. You're like, well, I think it's going to fall further than this, but maybe not today because of those pivots stuff. So, you switch it over and you do a pig dog long. You're like, it's worth a shot, but I don't want to manage it. I want, it's just worth a shot. But, you're like, all right, so I'll take a shot on the pig dog off of 150, 150. Because you got all these other levels of support, so you decide to do it, right? That's one way. Now, I wouldn't do that against a dollar because, I think the dollar's quite strong, right? But what about pound Swissy? Because let's say, how about this? Follow me, riddle me this. What if the logic is this? You think it's going to come down to that cluster that we saw just below there and at least pull back slightly on the pound dollar, which at the very least means maybe an exhaustion in the US dollar strength, at least for a little while. Or maybe, just maybe a sliver of British pound strength. You take the same thought and say, well, if it stalls out here, it's almost for sure going to be going up on pound Swissy. So you pull up the ham and cheese. Pull up the pound Swissy. See what I mean? You follow the logic? Look at that one. Very similar to the trade plan we just did today and yesterday. See how we have set this up? You see? We even identified this high to this high. So you'd look for the 382 to 618. Looks like we cut the 382 and the 50%. Beauty, right? Where? Right into previous support, which is now resistance. Good trade. We even have the Stokes kicker. Nice. All right, so anyways, that's a trade from, I guess, last week, but boy, it looks really nice. Good job, us. Probably up into here now if you were looking for pound strength, but that seems kind of dangerous, doesn't it? You know, I might even do it like that. Seems a little dangerous, but, right, we're at a 50% 50, 200 EMA on the 4 hour. 4 hour actually says it wants to go up. It's just waiting to go up. So if the pound dollar, if the falling pound dollar stalls out at a cluster of reversal pivots and a psych level, then maybe, just maybe, pound Swissy goes up. And you long, right? You long the pound Swissy based on fundamentals and relative strength. In the cash market, and then maybe hedge it with an option. Who knows, right? Make a call. Let's take a look at the yens. How should we do this? Let's do it this way. Let's load this up. Look at that. Let me ask you something. Do you think market participants are using monthly pivot points? Isn't that amazing? Very interesting, right? Yeah. So that's euro yen. Lots of great opportunities this week to sell. There's the gap, the Sunday gap. How do you trade the gap? Trade it back to fill the gap and then go in the direction of the prevailing trend. That's just standard gap theory. Standard gap theory. Fill the gap, continue mission. Now, very often, I don't trade into the gap. I wait for it to kind of fill, and then I continue mission. Another way I've done this in the past, and this is a very sort of personal experience, I don't know, 4 or 5 years ago, I had like 10 trade open or something going into the weekend. I felt really confident. That's the funniest thing of my story. I felt really confident in my positions. In fact, I was eager to watch the market open because there was some sort of news over the weekend, and I thought it would go for me, right? And I had all these trades open. I had my stop set on all of them, right? And I'm like, oh, I can't wait for the market open, can't wait for the market open, can't wait for the market. So I get to my computer 5 minutes for the market opens. I'm sitting there waiting and waiting and waiting and waiting and waiting. And I swear to you, I think I'm going to have 10,000 pips when it opens. That it's just going to gap in my favor. And most of my stops were at like, you know, I was at break even, I think, or something like that. But when the market closed on Friday, it was 150 pips away. So like I had 10 trades open, Some had 80 pips, some had 150 pips. So I'm good as gold, right? And I think it's going to gap even farther in my favor, and I'm just going to like make this windfall, right? Guess what? The market opens something like 250 pips down, not up. So now I'm not only am I not profitable, all my stops are at break even, but it gapped below my stops. When the market gaps, it doesn't touch your stop. This is a function of trading. It doesn't happen very often, but it can happen from time to time, where your stop's in place, but your stop's only triggered when price touches it. Well, price never touched it because it gapped over the weekend. I figured, I got like 1,000 pips. I think it's going to gap in my favor. I'm going to have like 5,000 pips, and I'm so happy. I'm so excited. All of a sudden, I'm down 5,000 pips. I'm like, what? And I remember, though, this is what I did. I wanted to panic, but I watched it, and I said to myself, I know how to trade a gap. So it was like this. It was like, let's say my stop loss was here. On Friday, the price was up here. I'm all good, right? But all of a sudden, boom, we're down here on the gap. And now I'm sucking wind. I'm losing a ton of money. And it shouldn't have happened, but it can happen from time to time, and only on gaps, right? But I say to myself, don't panic. Don't panic. You know how to trade a gaps. Watch it. So I watched it over the course of about 2 hours, minute by minute, second by second, and it slowly worked its way back like this. I cut my losses by about, 60 or 70% by being patient. I figured it would come back to the gap where basically back to my stop, and then it was going to continue mission, right? But I was so worried that it wasn't going to make it all the way and stuff, so I just counted it up to being a trader, and it happens from time to time. So it came back about 70%. I took a small loss, got out, and started breathing again. I guess for those 2 hours, I didn't breathe. So it can happen. It's just normal. It's normal trading in abnormal trading conditions. Wasn't the broker's fault that some big event happened over the weekend and the market gap, right? And that's just how it is. Very unusual situation, but it can happen. But the message here was I knew how to gap, and I used that knowledge to stay calm and to stay focused and to stay disciplined and not to panic. And I just waited it out. I watched it minute by minute, cut my losses, and just moved on. Because I knew how to trade gap theory. But let me tell you, that's when your patience and discipline is tested, right? Because I always say, hey, to be successful in Forex, you need to be patient and disciplined. And everyone's like, yeah, I'm patient and disciplined. Good. Where's the trade? I'm patient. Where's the trade? Give me a trade. Like, dude, you don't sound patient. Yeah. No. Good. I'm disciplined. Yep. All right. So anyways, risk if you're a bear is in the market. The yen's been strong for a while. Got to be careful. So let's look at it this way. Euro yen monthly support 2, the biggest support pivot I got. USD yen weekly M1, very important. Aussie yen, no, it's all over the place. Right now, its low is a monthly. It's in the middle of weekly, but it's not really respecting it. It's a mess. I'd probably want to take a walk. Now, why is that? Well, remember when I started, and it's the same scenario right now. Aussie is strong, yen is strong. Why would you be pairing those two together? I don't know, but that's what happens to you when you do. Nothing, right? Over here, let's take a look at pound yen. Now, pound is weak. We know that. Yen is strong. Better trade, right? Look at through the weeklies, through the monthly support 1. Woo-wee! Where's it going to go? Well, you know, I'd be worried around M1 and S2, monthly M1 and monthly S2. We're almost to M1. Let's just call it 80. And then S2 is 78. So I'd be very, 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 very careful around 180. Huge psych level, huge monthly pivot point. And if you don't have monthly pivot points, then write it down. Be very careful about shorting pound yen near 180. And if you're a bull, look for reversal patterns around 180.000. It's an aggressive trade because they've been coming down, but you have the psych and you have a monthly support pivot. That would be one where you go long the cash, right? And then hedge it with a binary option, if you can. Are there yens on this? Yeah, pig yen. So here's another way of doing this, guys. Cut your lot size in half because it's an aggressive trade, not fundamentally, but technically if the market's still bearish and you're going long, you're longing against the market, but it's more acceptable if A, your fundamental bias is long, and B, you're at hardcore support that even a blind person can see. Then it might be worth the shot, right? So you cut your lot size in half and use that cash now. So let's say you normally trade 2 lots. You use half of your budget now for your trade, right? You use half your budget to go long the cash market. So you go long pound yen, spot Forex cash with 1 lot worth of your money. Now you got that other money left over, and then you hedge it with a put short, just in case it doesn't work out. Doesn't cost you very much, covers a lot of your downside risk, and if you're wrong, it's just a small insurance policy, but then you get your cash position at break even, and then maybe you look for a new opportunity to re-long on a pullback and get that second lot in. And it only costs you a little bit to have that insurance policy. Okay? But now you're in good in a new trend, at the birth of a new trend, because of your alpha. You're so smart. But if you're going to do that type of trade, like, hey, the market's falling, so I'm going to buy it, you better hedge your downside risk. Otherwise, you're a gambler. Who stands in front of a freight train? But you know what people do, especially newer traders, and I can remember 2 or 3 different people that I've mentored over the years. One guy, that's all he could see. That's all he could see. Every trade he looked at was, it can't fall farther. So it couldn't possibly go higher. Well, you know what? Let me tell you something. It can't go farther. It can't go higher. It can fall farther. It probably will. Trade in the direction of the prevailing trend. But if you believe you're at a reversal point and you believe the risk-reward ratio is favorable, at least do something to mitigate the risk by either lowering your lot size or using half of your budget to hedge your first entry. You'll always have a second chance to get in if it's a new trend. You don't have to be the first one out of the gate. Right? In fact, when I was a venture capitalist, it was common knowledge to know that the first company out of the gate has the great idea, builds all the technology, educates the entire industry how to make it work, spending millions and millions and millions and millions and millions of dollars to do all of this. Then some other company just comes out and does it better because they learned from all the other mistakes. And the other company goes out of business because they spent all their money building the technology, proving the idea, educating the market they even needed this product or service. And then the competitor comes in and does it for pennies on the dollar with a slightly better idea because they learned from the mistakes, and the first guy out of the gate dies, runs out of money. Everybody funds the second one because that guy's profitable. Trading's kind of the same way. Or how about golf if you need an analogy? Right? You don't have to hit it 320 yards every time. The reason for it is the likelihood you hit in the fairway is diminished exponentially. I'd rather you hit it 250 yards every single time landing in the fairway. I don't know. That might be a stretch, right? I don't know. Let's do another yen, and then I think we're almost out of time, right? It's been 45 minutes. Is the pace okay? Am I going too fast? I mean, I've been doing this a long time, muchacho. Okay, CAD yen. Whoa, what was that? I didn't mean to do that. CAD yen right over there. Let me erase. CAD yen down there. You know, it's trying to get through the pivots, isn't it? The weekly. See, I don't like sitting like this. It's risky and it feels like it's slowing down. But I would sell off the moving averages and keep it below the weekly pivot. If it gets back above the weekly pivot, I think we're probably going up there. But I'm not ready to make that yet. And then Kiwi yen. Now Kiwi, remember the Asian currencies have been strong. So notice Kiwi yen's been moving sideways, but at least it's got a carry, right? So that might be an interesting one where if you can catch the Kiwi yen long on a dip, you jam your stop and just leave it. You'll probably, if you can get your stop to break even, just leave it alone. And if you get knocked out, oh well, nothing ventured, nothing gained, but you didn't lose any money. But if you can catch it at a key reversal point, and remember, you need support that even a blind person can see. Well, a blind person can see that. Weekly and monthly pivot clusters. You jam your stop, and what if this slowly starts heading back up again? Because if not here, then maybe next week at a reversal area, right? Now catch a long-term fundamental trend. No one's complaining about New Zealand. It's just stalled out because China stalled out because of Europe. It's not sucking wind like its cousin Australia, because Australia's number one trading partner is China. But you know what? New Zealand's a little more independent. Its number one export is dairy. What's Australia's number one export? Well, you have coal and iron ore. Everybody thinks it's gold. No, gold has a high impact relative to GDP. The number one and number two exports out of Australia are iron ore and coal. By the way, if you melt iron ore and sprinkle some coal in it, you got steel. Plus, you can use the clean coal Australia has to power electrical power plants. So who needs a lot of clean coal and steel? China, right? So that if China's slowing down, Australia is in serious trouble, right? Not New Zealand. It's fine. It's fine. Plus, it's got a nice yield. So maybe that's one that is truly, purely a carry trade for you. Maybe it'll just slowly kind of go up. Your stop's at break even. You're getting paid an interest, but not on your cash, right? You're not earning 3% on your $1,000. You're earning 3% on the $100,000 you put in play because you're leveraged. So your return to your cash is unbelievable. Okay, let's leave it at that. It's a busy day. Tomorrow, what, Wednesday, before non-farm payrolls? Remember, tomorrow's a good scalping for ADP. Just keep that in mind. Just be careful around these reversal pivots. We've had some good moves. Things don't have to last forever. Be careful, all right? If you're at reversal pivot points in a trend, at least recognize that your risk has gone up and then do something about your risk, right? Either, look for reversal patterns, cut your lot size in half, hedge it with a binary. I mean, do something. At least recognize the risk is increased, right? So thank you for your loyalty. I hope to see you again tomorrow. Thank you to Traders Way for being fantastic hosts. Peace on earth, pips be with you. May your profits be above average. Thank you, Ernest. Thank you, Daniel. Thank you, Jim. Thank you, Ron. Thank you, Dubisa. Thank you, Daniel. Thank you, everybody. Cheers.